This year, our conference is themed Gas, the Road to Economic Recovery. The theme underscores the critical role gas will play in revitalizing Nigeria's economy, creating jobs and delivering energy solutions that will transform industries, communities, and lives.
Ladies and gentlemen, please join me to welcome our first panelist, Director, Registration, Exchanges, Market Infrastructure, and Innovation at the Securities and Exchange Commission, Mr. Abdulkadir Abbas. A round of applause for him as he takes his seat right here on the stage. Right on the stage will just be fine. Thank you very much. We also have the President and CEO Afex Nigeria, Mr. Akinyinka Akintunde. A round of applause for him. Any discussions in the holding room should end right about now. Please, we need all our panelists to be in here so that we can commence the session right away. Thank you very much. Please, all discussions should end now. All right? It's time for us to have the second panel session. Remember, we have 3 other sessions. So after the second session, which is capital market, obtaining financing, driving industry growth, we'll have session 3, which is evaluating government policy in practice, IDC case study. There's also session 4, which is auto, agro, and alternate gas-powered applications. So yes, in the same mode as yesterday, all those sessions will run in quick succession, one after the other. And remember, once we get to the end of the 4th session, we'll have a closing session, then we'll come back to have our meal. Just before we have the meal, we'll proceed to the exhibition area. We have gas-powered cold rooms, gas-powered trucks, and that exhibition stand will be available. And yes, we'll have that opportunity to interact with all our exhibitors and find out what products they have on service, on display, and what services are available. Thank you very much. That will be how we'll plan the event for today. And remember, we also have water, coffee, and snacks in the second enclosure from here. So if you step out of the conference area, the first enclosure is the green room, the speaker's green room. The second is where you'd find water, coffee, and snacks. There will not be a time when we'll ask everyone to proceed to that enclosure for water, coffee, and snacks. So at your convenience, you can just go to that enclosure, grab your coffee, grab your water, grab your snacks, stretch your legs, then come back in. All the panel sessions will happen in quick succession, so that's how we'll operate for today. And yes, our moderator is none other than the second vice president, NLCGA and MD, Himas Merchants Limited, Bashir Abdul Rahman. Ladies and gentlemen, we have the full complement of the panel. Mr. Moderator is seated. Let the conversation begin. Mr. Moderator, over to you. So he will start with a short presentation, and after that, the conversation will start. Thank you.
Once again, welcome to our conference, ladies and gentlemen. This is the panel on capital markets, which everybody should be interested in because it's about money. I mean, that's what we're all in the industry for. As we're all aware, the banks are raising about ₦1 trillion to shore up their capital. About 12 or 13 years ago, or maybe 20 years ago, they did the same thing. And we're trying to access that same pool of funding for the gas industry. One of the panels yesterday went on at length about the need for infrastructure to develop the market. It is only the capital markets that can give you access to that sort of money that is cheap and that is patient. The panel before this one talked about the need for a local index. That is a secondary market. It is also a part of the capital market. Without, if such a market is developed, it will enable price discovery, transparency, liquidity, and it will even enable people who want to invest in the industry, who want to earn in the industry without being involved in operations, to take part in the industry. So here we have the regulator of the industry, which is of the Nigerian capital markets, which is Securities and Exchange Commission. And we have the biggest player in commodities trading in Nigeria, which is African Exchange, AFEX. My first question would go to Mr. Aking, the MD of African Exchange. Mr. Aking, what has been your experience in nurturing exchange trading of commodities in Nigeria, even though you don't do hydrocarbons yet, but it is experience that should be able to translate into the trading of hydrocarbons?
Thank you, Bashir. Good afternoon, ladies and gentlemen. It's a pleasure to be here. And I don't know why Bashir is doing this to me. My regulator is there, you're asking me to talk first. I might be expecting some interesting letters after this. But great question you asked, right? We do a lot around the agricultural value chain. But the good thing or the interesting thing about commodities is the fact that it's commodities, right? And what do we mean by commodities? Something that is readily available everywhere, everybody needs it, everybody wants it. How do we work with it? Now, the interesting thing about hydrocarbons and this market we're in is that a lot of things that are not readily available in the agricultural value chain are well established in this market. I mean, we're at this forum where we're talking about creating indexes, right? Being able to tap into the market. In the agricultural ecosystem, you won't hear, most participants are not interested in indexes because we're not yet there. We are more focused on the physical value chain and making it work. And that's the good thing we have in this market. We already have a huge informal market that is working very well. What is being traded are already standardized products. I mean, when you talk about hydrocarbons, they're hydrocarbons. My hydrocarbon is not different from your own hydrocarbon, right? They are all unified and standardized. And that is the first step, meaning, in my opinion, I think this market is ready to have an organized platform where access to required level of financing, either in the primary market or the secondary market, could be tapped into. And so I'll try and draw some parallels. When you talk about commodities trading in terms of agricultural trading, the first thing you look at is how do we store it? What are the logistics required to move it from one location to the other? How do we distribute it? This market we're in right now, in this room, all of this already exists, right? We have storage facilities that are well regulated. We have the logistics infrastructure that makes transportation and distribution very much available, right? I think that's a huge step forward that will not give us any concern if we need to start tapping into the market. The other part of it is what is required for us to bring financiers into the market. When you look at the capital markets, there are typically two broad categories, equities or fixed incomes. And these are the ones that people and market participants or capital market participants are most familiar with. But when you talk about commodities, the question is now, how do you get financiers and capital market operators to be able to buy into this and then provide that stability in terms of pricing, ensure availability, ensuring clearing, settlement, and delivery all work seamlessly. And that's where you need an organized marketplace that chaperones the industry into this process and then makes it work appropriately.
Thank you, Mr. Akin. And this is Mr. Oba from Lagos Commodities Exchange, right? Thank you for coming. So, Mr. Abdul Qadir, given that government generally nurtures what it wants to grow, and given that commodities and derivatives have historically not been as advanced as equities and debt in Nigeria. Does the exchange, does the Commission have any plans to maybe give concessionary fees or any development plans to ensure the growth of hydrocarbons trading in Nigeria?
Thank you very much, Bashir. Good afternoon, ladies and gentlemen. It's really a pleasure for me to be part of this important discourse. So, the SEC, being the apex regulator of the capital market, has this twin mandate of regulating and developing the Nigerian capital market. I think that is really the crux of the mandate of the SEC. And the whole idea about the market development lies on trying to create an enabling environment where products will be offered. You have a lot of players that will come to the market to be able to transact on that market. So today we are talking about what role will SEC play, or has SEC been playing, to align with this important milestone of opening this space or deepening this market in terms of attracting new asset classes, attracting new frontiers of the market, which hitherto we don't, tap into. As you rightly said, Bashir, we know the market is predominantly equity-based and fixed income-based. Are there opportunities to create this market? I would say yes. What has SEC been doing? Remember, we have launched a 10-year master plan, capital market master plan. And the whole idea about that master plan is to be able to now unlock private capital. And you cannot just unlock the private capital without encouraging new asset classes. And that is why this conversation is very important. We are now talking about, carbon credit, for instance. And even though we are yet to have the framework, the SEC is really thinking seriously about coming up with this regulation in terms of opening up that space for carbon credit, market transaction. And this will now entail creating the appropriate market infrastructure. I can talk about what we have done in terms of the commodity space. This is like an additional playbook, even towards the commodity exchanges. If you have additional asset classes that is well regulated, and we have defined infrastructure that people can be able to leverage on. So what we are doing from our own side as SEC is to really open up that space by coming up with what? First, that enabling regulation. Create that environment whereby you can be able to now attract or unlock that private capital. Carbon credit is one of the areas that we are actually looking at in terms of opening up. Then, when you talk about incentives, there are so many ways you can talk about incentives. Not necessarily like giving a kind of a rebate in terms of, let's say, transaction costs. But there are other areas that you can incentivize issuers. One is to address this issue around time to market. Secondly, is to be able to have clarity, even in the regulation. What does it entail? For instance, if we have this regulation on carbon credit, for instance, what does it entail for one to be able to come and either buy or sell the carbon credit on a platform, on a trading platform? So SEC need to now come up with what you call an enabling framework, criteria that you can be able to now onboard and then even approve this trading platform that we can be able to now trade on that. Now, the second issue that we need to look at is to be able to now actually raise this kind of awareness that, look, capital market has the potential or has the ability or the capacity to be able to now unlock private capital through buying or selling carbon credit, for instance. So these are some of the things that we are looking at as SEC towards like incentivizing that new frontier or new asset class that we're looking at in terms of encouraging issuances. Remember, we have issued regulation on green bonds, sustainable finance, and we have a lot of traction in that regard as well. So just to answer your question, yes, we're keen about this initiative, and SEC is really thinking forward in terms of providing the enabling environment and creating, some of these sweeteners that will encourage this kind of transaction to take place in our market. Thank you.
Thank you very much. Mr. Oba,
Good afternoon.
good afternoon. Given how old the Lagos Commodities Exchange is, and given how developed aspects of the downstream market have been, what has prevented Lagos Commodities Exchange from introducing such contracts on your platform?
Thank you very much, Bashir. And I'm just going to take off from what the SEC, our regulator, has just spoken about. I think about a year or a little more ago, at LCFE, we sent in a request to SEC about the intention to start trading contracts in hydrocarbons. SEC responded, and then they have asked us to provide some measure of documents, for instance, which cuts across the various players in that particular sector. So there's a need for us to give them like a letter of no objection from the major stakeholders in that sector, which we are working on. We need to provide agreements across several other stakeholders like custodians, logistics firms, storages, so that once the contract starts to trade on the platform of LCFE, the SEC will be sure that it will be highly sustainable. Granted the fact that in LCFE, we have the platform ready, we have the technology, we have the in-house expertise. However, because of the complexity involved in trading hydrocarbons, so the SEC is very, very careful before allowing anyone to go ahead. So it's important that all the stakeholders are all on the same page. So we are waiting on other partners to provide those documents, which we will now be able to go back to SEC, and then hopefully we'll be able to get a final approval. But our own side, we are working assiduously in conjunction with the SEC to get a final approval for us to start trading in the hydrocarbons.
Thank you. Aki, the next question goes to you. Given the size of the Nigerian market, do you see a West African index developing from activities of exchanges such as yours if you start trading hydrocarbons such that we do not have to make reference to the Far East or the US or Dubai? We produce this thing here. Why can't we price it here? What do we need to do?
Very, very, very interesting question. And it's something that I think it's not up to the regulatory environment or the infrastructure providers in the market to determine. I think it's more about everybody in the industry that needs to sit around there. And I like drawing parallels between these two markets. In the agricultural market, for example, do you know where cocoa is priced? It's priced in London or New York. And we export it from West Africa. About 40-60% of cocoa consumed globally comes from West Africa, but we price it in London, right? And that's the same question here. So, and where I'll put it is, what is stopping us from saying, this is how we price it, and anybody that needs to take a price must take it up from here? A key issue that needs to be put in place, first and foremost, is sound infrastructure that makes the framework for pricing this commodity as transparent and as accessible as possible. If we have that in place and we all have that singular drive towards making this happen, it can be impossible. I mean, so that we don't sound like broke records, Nigeria has everything required to make it happen. But the question is, what's missing, right? We need to have that unified front, which is why I'm happy about this kind of conference taking place. When we have this aggregation of stakeholders and this kind of conversations, then we can formulate a clear path to where we ensure that price of our products, either consumed locally or those that are intended for export, have a local pricing source. There's no reason why we should be taking prices from the foreign countries. Why can't we develop our own structure here? to make it happen. And once we have that, I bet you if Nigeria can take the lead on this, all other West African countries or African countries will align appropriately. In short, it's not impossible. We just need to have that unified front to make it happen.
My last question, which I will throw to each of you sequentially, starting with our regulator. What do you think is most important for traders now, not the exchanges? What would be more, or what are the key things that they would need to put in place to succeed in having this market develop and thrive?
Okay, thank you, Bashir. So, I think I can approach this question in two perspectives. What is important, or what are the key building blocks to allow things to thrive from the trader's perspective? First of all, we need to have traders or participants that actually understand that market segment that we're even talking about. And how do we develop this kind of players? These are players that you can be able to develop. We can even have a kind of arrangement where we will have structured training so that you can be able to have a lot of participants or players that understand that segment of the market. And I think that's what we even started. When we registered the exchanges, for instance, the commodity exchanges, the commodity brokers, we have designed a special program or training program for those kind of brokers so that they can be able to understand that there's a difference between equity trading, for instance, as a broker with commodity trading. So one of the building blocks is to be able to have versatile traders that actually understand that space. And how you can develop it is to be able to have a structured training. Remember, if you are going to now have a marketplace, for instance, that trading place has to be registered by the SEC. And in terms of registration, we have requirement for registration of those marketplaces. Just like how we registered the IFX and LCLP, for instance. If you have another exchange, for instance, that want to now focus on that particular area, in addition to existing exchanges, they have to comply with certain criteria as well. So you created that marketplace as well, aside from having versatile trading operators that will be able to play in that field. Once you have those good building blocks, the third issue is about having key critical infrastructure that will enable those kind of trading to take place. And I think I can mention, I touch on that, because if you don't have the critical infrastructure, you are going to have deficiency in that regard. You cannot be able to operate. So in terms of addressing the entire value chain issue, it will be a holistic approach, having good players that understand the field, having the right environment and the right infrastructure that will allow this kind of trading to take place. And that is the way, in my own opinion, that you can be able to really develop a vibrant, market, whether you call it a carbon credit market or whatever kind of market that you are looking at. And I would like to say this. This is not just like something that is novel to us, but it has been happening in other jurisdictions. There are quite a number of jurisdictions. For instance, Kenya have regulation on this. Aside from Kenya, I think Egypt too, they have good framework, in this kind of, and we have other, jurisdictions as well that have this. In addition, the commodity exchanges that we have registered, they started having this kind of infrastructure. The most important thing is that as a regulator, let's work together with the players to be able to see that we have a robust infrastructure that this kind of transaction will actually happen in a very transparent manner, which will now lead to unlocking or opening up a space that will add value to the capital market. I think that's what we should be looking at.
Thank you. My perspective would be that traders in this ecosystem need to embrace technology. In this time and age, we can't run a vibrant ecosystem where we seek to have more transparency, visibility, access to prices without leveraging technology. Technology will do a lot of things for us. First will be, it will provide transparency in pricing. Second, it will ease aggregation of prices, right? Third, it will ensure that the core infrastructure to make trading of commodities as seamless as possible. And the fourth critical part would be it would open up this segment for a lot more players to come on board. When you have a technology structure in place, then you've opened up the market to be able to maximize the value that is inherent in that ecosystem. So that's the first thing I'll say traders and those intending to trade in this ecosystem needs to embrace. The second one is there needs to be a concession around what we are lining around, right? If we want to go through this route of setting up this product to be traded on an exchange, the traders are actually the building blocks for this to happen. If the traders in this market are not aligned, it's as good as dead on arrival, right? So there needs to be a unified front for all traders to be able to play, and that forum where traders are able to bring to fore the issues that may be happening and then profile ways of resolving it, and then we can move forward on the back of that.
Thank you, Bashir. My own input, in addition to what the earlier speakers have said, will be this. And I'll give maybe one or two examples. In the time past at LCFE, we had approached certain traders on some commodities. Why don't you come and trade your commodities on the exchange? The response was, oh, we've been doing our trades, we have our money, we don't need you guys. So there's a need for a change of mindset amongst traders. Many of the foreign companies who come into Nigeria to come and trade commodities, you see them reporting billions. I mean, anytime you look at the returns on Vitor, Trafigura, and Co., actually it's far more than the budget of Nigeria. I did a last estimate, maybe like 17 times the turnover they did last year, about 17 times the budget of Nigeria. Now, what do these companies do? They trade on exchanges, then they go to the financial sector in their home countries and then raise capital and then come to Nigeria to trade. And then that way they are at an obvious advantage. So what we tell folks who are traders is that, look, if you come on the exchange, yes, you've been doing your business. Nobody is going to hamper what you've been doing. However, come into a structured environment. The point is, it allows you to generate accurate data that is reliable. The second thing is that the financial services sector will have more confidence in the things that you are doing. If you take an example of a warehouse receipt, for instance, which is issued against stocks, it gives confidence to any bank, and because that instrument is fungible. So it's important that traders begin to embrace coming to work and partner with commodities exchanges in Nigeria. That's number one. And number two, SCC said earlier that it's important that people understand the market very well, especially the dynamics that drives global commodities market. And if we are talking about the hydrocarbons, you were saying something earlier, you laughed. By the time we begin to drill deep, you even laugh more. For instance, our crude oil is traded as if it is produced in the Gulf Coast of America. And you begin to wonder why. Because of the consumption pattern. The volume we consume in Nigeria is tiny compared to what these other economies consume because of the level of industrialization. We've not gotten there yet. Not until we start having huge industries that consume so much, then probably we can begin to compete with them and then set those standards. However, having said that, traders need to commandeer liquidity into the system. If we look at hydrocarbons, the time we wanted to submit to SEC for our crude oil contracts, I sat down when I was writing those things. One little contract of 1,000 barrels of crude oil, I saw how much it translated to. It's not everybody that can play in that sector. So it's important that traders should be able to muster liquidity into that system for them to be able to have a successful and thriving trades, especially in the hydrocarbons. The other thing I would also like to add is the fact that we need to have access to data, reliable data. The oil and gas sector thrives on data. If your data is not correct, then your decisions will not be correct. And in this instance, you are involving quite a load of cash. So traders must embrace getting adequate data where they can run the analytics on. So they should be willing to expend cash in getting the data that will inform accurate decision taking on their own side. Thank you.
Thank you very much, Mr. Oba. And that is actually a very good summation for this panel because, as I said at the beginning, we're all here to make money. And the money that is available if these commodities are traded on exchange is actually multiplied. You find the Chicago Mercantile Exchange is the biggest commodities exchange in the world. The notional value of the derivatives on that exchange are 10 or 20 times the actual value of the goods being traded every day. And people actually make money on those things. So if we can do this thing, it's for the benefit of the entire country and for our industry. Thank you very much. We are now open to take questions. Are there any questions? Wow. Were we so clear or are we too technical?
Okay, my name is Felix Ekundayo. I would like to pick up on a point that you mentioned. It's always been it's confusing why our commodities are not traded transparently. So you mentioned cocoa, which has gone on for decades. We've got white products, significant amounts of white products are traded into the country, petrol, diesel, and so on, crude traded out of the country, okay? What is the challenge in getting, I kind of have a theory, but I'm not going to say it. What is the challenge in getting more transparency into the system here? What is the challenge in terms of getting these things reported? We're happy to report them offshore, but we're not happy to report them locally. So if you have all these commodities that are so much bigger than gas, for example, is today, let's not repeat the mistakes of the past. How do we then start to make it work for gas? Thank you.
Okay, and I'll allow others to weigh in on that. I think the first, I always try to let people know that when you talk about commodities trading in any shape or form, it's something that has always existed, as you rightly said, right? And the question is, how do we change the mindsets of those that have done these things without a platform to now having to come on a regulated platform to trade? Unfortunately, my guy is there. One of the challenges we had when we started this market was, you see a trader far up north, wherever he is, every day for the past 40 years of his life, he's been selling his commodities consistently. Then I show up at his doorsteps with my suit and tie in his farm, and I tell him to come and trade through my platform. Then I start telling him that I'll charge this price, I'll charge this price, and he needs to pay VAT, he needs to do all these things. The man will look at you, I'll be like, you're not serious, right? You are coming to me to supposedly propose a solution, but you're charging me for it, right? If the value addition for pricing, data reporting, and transparency is not clear, you won't get anybody to sign up onto this. That's the first one for me. The second one is we need to also look at the value access to price, visibility, and transparency brings from a broader level and not from individual level. As a trader, the first instinct that will come to my mind is if I show you my books, then you know how much I'm making, and then you stand to undercut me. And I don't want to do that because I don't trust you report the data or you report your own accurate figures. But offshore, I mean, nobody will start going to look whether I'm trading with a foreign brokerage firm or not to see what I reported. I can easily do that. But locally, I know that my regulators are looking at me, tax authorities are looking at me, my competition is looking at me, right? But we need to demystify that myth and be clear on the value proposition we are bringing on board. As we've established on this panel, if you don't have data, there's no way you can unlock capital. If I can't see your data, I can't bring money into your business. And we're talking about a market that is not yet fully developed, right? So we need to be able to all come and be able to willingly share our price data, our price information. Maybe we look at a structure that will not unnecessarily expose one party and give another one advantage over the other. But for us to move forward in terms of providing more growth at the sectorial level, at the industry level, then it's something we need to do. And then we need to be clear on the value proposition we're unlocking by providing that data. And one of the things one of the examples that usually comes to mind was when before the telecommunication industry got revolutionized, right? We had a government's own that was not up to par, right? But when we opened it up, a lot of players came on board, and then all of a sudden we see more investments coming into the country. We see more clarity on number of subscribers. We see more clarity in terms of how much Nigerians are adopting to the use of mobile phones. Even in rural communities, everybody is jumping on the mobile phone trend. Access to internet is growing. Why? Because there's enough data for us to be able to make informed decisions to bring in investments into the country and drive more penetration of the required technology in rural community. And that's the same thing that needs to happen in this market. Data will give us more visibility at the macro level what's happening. Then you get to know the level of pricing. Once this is clear, profitability at a macro level is understandable. Then you see people with capital, both from the banking sector, from the capital markets, pension fund, asset managers, everybody willing to be able to put money to drive the development and industrialization of this sector.
Thank you very much.
Thank you. Just to add to the point made by Mr. Aki, I think if you look at it in the holistic manner, this unique value proposition, I think, for me, is key. If one want to come to a regulated market, one will ask, what value should I really drive if I come to this regulated market? And I think we had that kind of instances. When SEC came up with what you call commodity trading ecosystem report. So that report look at the entire gamut of issues around commodities, and we now engage stakeholders. We got input, and those input with our recommendations. Now we're even at the stage of implementing this recommendation. I think for me, the issue is about what unique value proposition will I drive? As a farmer, why should I come to, for instance, commodity exchange to trade on my produce? Are there value addition that I will actually get? If we can be able to really demonstrate empirically, yes, there is a value addition, I think we can be able to now see this kind of migration between the informal market and then the regulated market or formalized market as it is. And I think it is really something that I think it's not just the work of just one organ. It's supposed to be a kind of all engaging affair with all stakeholders. What I could remember, I know there was a time when we had a discussion with Fairface, and they keep on asking, why can't you try to encourage developing other asset classes like commodity-linked instruments, for instance? We have this framework in place, but I think the point is, if pension fund or PFS can be able to invest in this instrument, they need to see that it is actually an instrument that is regulated by SEC and is being traded on a SEC registered platform, for instance. So these are some of the kind of value addition that it will translate. So for someone that want to now transact on a commodity exchange, and he has this kind of instrument that he can be able to leverage on, I think he can see that, okay, these are the kind of values that I can be able to come up with. If we demonstrate those kind of things, I think it will be like a kind of total game changer. The other issue that I wanted to mention is about issue around standard, harmonizing this kind of standard of this produce. So if you are going to transact on a commodity platform, for instance, there must be a common standard which all the exchanges must leverage on that one. I think that is one another key area that we emphasize, and very soon we have been working with SON around that issue. Once that standard is approved, our own is to now direct all the exchanges to comply with those standards in terms of trading of those instruments on their own platform. Thank you.
The other thing I would like to add is the fact that putting in place a policy framework will help us a lot in Nigeria. We are a unique country, we are a unique people, and we love the bandwagon effect kind of scenario. At LCF, what we do is we pick on a particular asset class and speak with potential traders that we can work with and then develop a concept. And the moment we are successful with that kind of concept, then you see other companies saying, look, we need to come and work with you. So I believe strongly that if our regulator can help us in pushing for policies around this, I don't want to use the word mandate, but that encourages traders, especially in assets that are of common national value to us, like oil and gas, that look, from now, you need to trade these assets on commodities exchanges. I'll give you a flavor of one. We approached one of the IOCs at the early days when we wanted to submit our application to SEC. And what the man who chaired that meeting said was that, look, go and talk to my landlord, that is NNPC. If NNPC asks me to work with you guys, I don't have a choice. Then we carried our bags and baggages and went to NNPC. Okay? Let me just stop that. Let me stop it at that point. So, but I believe that if our regulator can help us, NNPC people were cooperative, really. But what they told us is that it is not a short sprint. It's a marathon. And they gave the reasons for that. Because one, oil and gas is a national asset. So you need to bring in Ministry of Finance, Ministry of Petroleum. Then it used to be DPR. Now it is DPRA. Everybody has to sit down around the table. Of course, presidency has to be involved. So that's why I said a policy drive is what can actually begin to help us bring forward a game changer, actually in trading hydrocarbons on commodities exchanges in Nigeria. Without that, we'll just be, somebody asks us, why are you guys not, they came from abroad and said, oh, what volume have you done? And then my MD said, if people don't bring products, where am I going to get the volumes? Everybody's just asking for volumes because it's a pain in the neck that every day you go out, people who are supposed to benefit directly from these trades, you are literally begging them, bring your products, come and list on the exchange and all of that. So with the regulator helping us, driving such policies, I believe that we'll begin to gain traction going forward. But in the interim at LCF, what we do is that we come up with a concept and then look for one or two traders, sit down with them, maybe bring a few banks along, and then sell the idea and run with that kind of a pilot. And as soon as it's successful, we see other people showing up at the door that they want to participate in that.
Thank you very much. So, ladies and gentlemen, with that, we've come to the end of our session. And thank you all for your attention.
All right, that has been the session on capital market, obtaining financing, driving industry growth. And yes, want to thank and appreciate our panelists. Thank you for adding your voices to the conversation. And it is now time for us to progress to the third session. Paparazzi, that is your cue. Thank you very much. Gentlemen, thank you for sharing from your wealth of personal and professional experience. Thank you. So ladies and gentlemen, distinguished delegates, that is it for panel session 2.